Senator from Tennessee and I be allowed to engage in a colloquy and speak as if we're in morning business?
Without objection.
Okay. Mr. President, it's a pleasure to be here today with my friend, the senator from Tennessee, to talk about legislation that we and 8 and actually now 9 of our colleagues, bipartisan legislation that has been recently introduced to reform our housing finance system. I came into office a couple years later than the senator from Tennessee, but I got here in January of 2009 when the entire future of our financial system was uncertain. The members of the Banking Committee rolled up our sleeves and tried to work together to prevent future financial crises. And while history will determine whether we accomplish that goal, the senator from Tennessee and I worked strongly together on a couple titles of what subsequently became known as the Dodd-Frank legislation. And while there are problems in that legislation, and while there are problems still within our financial system, I think no independent observer would not say that our financial system today in 2013 is stronger than it was after the crisis. But one area that did not receive very much attention was the question of housing finance. We also know that in many ways our housing finance system, both from lack of underwriting, the process that then ended up allowing a lot of mortgages to get packaged off, securitized, with the assumption that there would never be a decline in housing prices or significant decline in housing prices, and that these securities would never be in jeopardy, in many ways led to part of that financial crisis. At the end of the day, those institutions, Fannie and Freddie, that had been the core of our housing finance system, ended up requiring $188 billion of taxpayer support to shore up those institutions so that the whole housing system wouldn't collapse. Well, we're now 5 years later, and we believe that it is time to transform the failed model of Fannie and Freddie into a smarter, sustainable system with more private capital. We believe we can better protect the taxpayer and maintain broad access to affordable mortgage credit. But we need to act soon to prevent this issue from falling victim to election year politics. The status quo, and everyone from the administration to many of us here on the floor of this Senate, to many housing experts know, the status quo is just not sustainable. So we've got 2 important questions before we get into some of these principles that I'm going to engage with my colleague, the senator from Tennessee, on about, 1, why do we need to take action now? And then the second question, why does Congress need to act? And I'll take the first question. Why is the time now? Well, the last 5 years since the housing and the overall financial crisis, we have seen, slowly albeit, but the housing market come back to life. Obviously, this has been supported by a low interest rate environment that has permitted more refinancing and loan modifications. Rising home values have brought many homeowners out from underwater mortgages. And housing prices have been a significant factor in Fannie and Freddie's recent record profits. But now, those very profits have somehow been wrapped into at least some of our colleagues' discussions about our debt ceiling debate. Speak for this senator, I think the senator from Tennessee, and candidly, I think many senators are not even engaged with us on this debate right now. The last thing we want is for Fannie and Freddie to virtually serve as a piggy bank for either side of the aisle's pet projects. And if we're not careful, that could happen. Fannie and Freddie have been in conservatorship for 5 years. Before we become even more dependent upon this broken system, it's time for us to move forward. So I'd like to ask my colleague, the senator from Tennessee, if now is the time, if he might share with us some of the ideas he feels and we feel about why it's important that Congress be involved in this process and not simply allow this conservatorship to go on ad infinitum into the future.
Mr. President, I want to thank the senator from Virginia. I have enjoyed thoroughly working with him on this. We've been working on it since last fall. We spent a lot of time talking to various groups to try to get this right, and we know that every bill can be improved, but we've done our best to present something to the United States Senate that we hope will be marked up in the Banking Committee something that, as the great senator from Virginia mentioned, has attracted numbers of people on both sides of the aisle. And I want to thank again Senator Tester, Johans, Heitkamp, Heller, Moran, Hagan, and now Kirk for joining us in this effort, a diverse group of folks from diverse places around the country that I think have come together to solve this major problem. All during the Dodd-Frank debate, and we were certainly in the middle of that, all people talked about, it seemed, was the fact that Fannie and Freddie were not included. And yet Fannie and Freddie were two of the biggest failures that occurred during that time. As the senator from Virginia rightly mentioned, $188 billion of taxpayer money had to go into these entities. Mr. President, we've dealt with most of the issues around the crisis. I know there's still some rules that are being promulgated, and we had some that came out yesterday. But this is the last piece. And as the senator mentioned, the housing sector has been growing and coming back. We understand the importance of the housing sector, and therefore we designed a bill that transitions over time and moves us to a model that we hope and believe strongly is far more sustainable. First of all, let me just mention the 5 things that we've worked on together, and I know that each of us is going to stress a lot of different things as we move through. I know we plan to come down here at multiple intervals as we move ahead, but the fact is, number one, what does this do, this bill? First and importantly, it breaks up the GSEs and liquidates them. It does it over time, but our bill does that. Secondly, and very importantly, and this is something that we've talked a great deal with industry and certainly people from all sides of the aisle about, this in advance of any kind of government reinsurance. And I just want to say to the senator, one of the reasons we looked at it this way, if Fannie and Freddie just had 5% capital, the that are currently performed by Fannie and Freddie, it gets government out of the business of pricing credit, which is something that we both have thought needed to occur. And it modernizes our system of mortgage-backed securities. But I think the thing that we began with, and I so appreciate the senator's involvement, we realized that one of the major flaws in our housing finance system in the past, and even, well, it isn't today because the government owns these 2 entities, but in the past has been private sector gains, public losses. I mean, when you have a situation where you have shareholders, you have the private sector doing well when times are good. They had an implicit guarantee. People figured that the government would come in and backstop these entities if they failed. Obviously, their underwriting standards got really terrible. The organizations failed, and what happened? The taxpayers came to the rescue, unfortunately, with $188 billion, which has not been paid back. We still have these entities in conservatorship, and one of the flaws both of us, coming from the private sector, saw was this is not right. There is no way we should have entities where there's private sector gains when things are going well and public sector losses. So I want to thank the senator for joining in, for all the hours he and his staff have put into this to try to make this bill as good as we could possibly make it to bring it to the floor. I look forward to the input of the entire Senate. I hope we have an opportunity for a markup and a presentation later this fall. But I couldn't be more grateful for the senator and his efforts and his willingness to do this, and obviously his willingness to work hard to see this go across the finish line.
Well, Mr. President, I want to return the same compliment to the senator from Tennessee. He brought a greater breadth of background in the housing finance and public finance sector than I did, but together, working with our other colleagues, I think we've all built together a series of critical points. And again, echoing what the senator from Tennessee said, there's always ways to improve on legislation. But the first and foremost point was we need to make sure taxpayer protection. We need to make sure the taxpayers are fully repaid that $188 billion. We need to make sure as well, and we spent a great deal of time working with industry and others, that there continues to be broad access to market credit. One of the challenges I think that we both felt with Fannie and Freddie was there was not only a combination of a private sector gain, public sector loss with this kind of hybrid model, but layered on top of that, there was a social purpose. I, for one, believe very strongly we've got to make sure that there's affordable housing, that there's good access to market credit. But when you layer that on a quasi-private entity, as we did for years with Fannie and Freddie, you ended up where you weren't sure whether those entities were performing that necessary securitization and financing purpose to maintain the overall housing finance sector, or whether they were allowing certain loans that maybe shouldn't have gone into this process because of their social purpose. So we've said, well, we've got to make sure there is the appropriate private sector, taxpayer protection, private sector, 10% capital, very important. We also said, let's go ahead and split off that public sector role, clearly identify it, make it sure that those loans that get securitized, a small transaction fee, not a tax, small transaction fee is charged, and that those funds are set aside to promote that rental housing, access to credit, low-income housing. Have that audited, standalone, perform that important function. As we said as well, doing this, as the senator from Tennessee has mentioned, and he's been quite strong on this, we're going to make sure that the government role is clearly defined, but much more limited. There are some who say we can do this totally on the private sector side. Well, if we hope that there can still continue to be the 30-year fixed mortgage product that the American public, I think, has come to expect, we can privatize more, but not having that ability to have that government backstop would remove that very essential component of our current housing finance system. So a more limited government role, but still the ability for our American consumer to have the kind of access to financial products that they've come to expect. Again, it's been mentioned, making sure that we expand private sector capital and make sure that they take care of that underwriting and credit assessment that, quite honestly, the old model didn't really provide. And this I'd like to ask the senator from Tennessee, because this was one that we went round and round again, and I want to again thank him and his staff and my staff and the staff of our now 9 co-sponsors on this legislation. One of the things that was quite important to us was, if you're going to create this new model, how do we make sure that while we want more competition, private sector competition, while we want institutions to be able to go ahead and provide this important issuance and securitization function, how do we make sure that those small banks, that community-based bank or that credit union, that small bank in Knoxville or that small bank in Martinsville, Virginia, still gets access to the same kind of ability to issue mortgages, have those mortgages securitized, and not be at the disadvantage of some of the mega institutions. So I'd ask my colleague, the senator from Tennessee, Senator Corker, why don't you speak to that issue on, because it did take us a lot of work to try to get this right, and there may even be further refinement, but I think this is an area where, again, with the reaction we've seen from the credit unions, the community-based banks, I think we've made a great first step.
Yeah, one of the things that, no question, the community banks and credit unions around our country have been concerned about, even though Freddie and Fannie are 90% of all home mortgages today and very dominant, obviously because of what has happened, but also because of the tremendous market share they've had, is that if you're going to wind these down, are we going to be assured access into this market? And so we have created mechanisms for them to be able to come in through issuers, to be able to do this. One of the things that so many of the community banks and credit unions have complained about as a tremendous disadvantage with our existing system was that there was volume pricing. In other words, if you were a big user of Fannie and Freddie, they gave you a big volume discount. So Wells Fargo, Bank of America, JP Morgan, as they tried to process loans through Fannie and Freddie in this old system, they got big volume discounts, and so they were more competitive. So the community bankers that mean so much, and these organizations obviously are important that I just mentioned, but the ones that really drive things back home, the community bankers that are members of the Rotary Club and the Lions Club and are involved in our communities, they were constantly at a disadvantage as it relates to housing finance. And so one of the components of this bill is not only to ensure that they've got equal access into the system, and we do that, I think, very eloquently in this bill, but in addition to that, we ensure that there's no mechanism that allows for volume pricing. Everybody is treated the same, as it should be, because in this particular case, we end up with an explicit government guarantee. It's very different. You don't have a situation where you have private shareholders doing well when things are good and the public doing bad. But one of the reasons we felt confident in moving in this direction again was the tremendous amount of upfront capital in advance. So again, we've tried to deal with the smaller institutions. Matter of fact, we haven't tried to deal with it. We've sat down and worked this through and worked through the many issues that they have brought up. We know how important they are to everyone here and everyone in the country. We've dealt with that, but we've also created enough upfront capital, again, as the Senator has mentioned, to protect the public. So I know that, again, every bill can be improved. We saw that most recently with the immigration debate. As a matter of fact, I think that's a good model. We've introduced something. I hope that the Banking Committee will take this up soon. I mean, it's almost unprecedented to have 9 members of the Banking Committee co-sponsoring this piece of legislation. Hopefully, it'll have the opportunity for markup or improvements. We know that the chairman and ranking member obviously are going to want to put their stamp, and many members in the committee, of anything that occurs. But I think we've done some of the work that's important to establish a very good beginning place. And we've tried to address, as the Senator mentioned, the many community banks around our country that are in here constantly, that are so important to the states that we represent. And I think we've done that. And again, I know the Senator and his staff and many of the co-sponsors, that was something that was an ultimate threshold for them, was to ensure that the community bankers and credit unions around our country had the appropriate access. And I think we've hit that good place in this bill.
Well, Mr. President, I know our time's about up. I just want to close and turn it back over for final comments to my colleague, the Senator from Tennessee. Just to urge my colleagues and their staff and folks who are interested in this issue, this was the one piece of unfinished business on our financial system reform. And while there are some today who say, well, things have gotten better, we should just allow the status quo to continue. Well, I don't think from the administration on down there's anyone that thinks the status quo simply continuing with private sector gain and public sector losses is the right model. We ought to take the lessons of the last 5 years and some of the very good work in terms of standardization that's being done at the FHA right now, take what we've learned, and set up a new model that, as the Senator from Tennessee has said, make sure that we get that taxpayer protection. And I would simply add, when housing is a critically important part of our overall economy, any piece of legislation, and let me not by any means say all these groups have endorsed this legislation, but they have all been very generally supportive. They've all got areas that they'd like to see improvement. But when you've got realtors and home builders and mortgage bankers and large banks and small banks and community organizations and groups who are concerned about low-income housing and rental housing, all saying we're in the ballpark, that in an area that is so important to our economy and so complex, I think we've taken a great first step. And I would urge colleagues to join with us. The Senator and I will be happy to come and make presentations. We've found so far virtually many of the members that we've sat down with, when we walk them through all the processes and all of the kind of protections we've built into this legislation. I think that's one of the reasons we've had such success at 9 members of the Banking Committee, almost half the Banking Committee, without even having all of them had a full presentation with this kind of support. So I, again, want to thank my colleague, the Senator from Tennessee, for his great work on this, his leadership on this. He has been the lead sponsor. I'm proud to be his wingman on this as we've continued to work through it. My sense is, though, that this is the time. It is my hope that the Banking Committee will take up this piece of legislation, make their improvements on it. But it would be a huge mistake if, with interest rates at their kind of record low time, with this housing market coming back, with us putting in place a 5-year appropriate transition time, if not now, then when would be right to do the kind of meaningful housing finance reform that I think so many experts across the ideological spectrum have all called for than now. So I look forward to working with my colleague and friend of the Senator from Tennessee, thank him for his good work, and happy for him to close out our comments here today.
Well, I want to thank the Senator again for all the hours that have been spent. I think we both realize this is a beginning point, meaning that there's a piece of legislation that has a lot of bipartisan support among really talented and wise members, excluding the two of us, and I thank them for, joining in and helping make this bill better. Obviously, this is something that we think may be taken up sometime this fall, and I do hope we'll have the opportunity to make presentations to people throughout the Senate very, very soon. But I want to make 2 points. Senator from Virginia, because of his background, was probably more involved in the banking issues than most people here, because he brought a lot of background and expertise. I felt fortunate to be involved in some way during that time, and he and I both remember, and I hope the members of this body will remember back again, the big issue that people felt during that time was unaddressed were the two GSEs, Fannie and Freddie. And, candidly, it was a pretty complex undertaking. There was a lot of other things happening. That was a fair criticism. But at the same time, there was a lot being dealt with. Time's gone by now. The housing market has improved. We still haven't finished our work. And I think most people here understand that, this last crisis brought such hardship to so many people across this country. Trillions and trillions of dollars of household wealth went down the tube because we had a system that wasn't stable, a system that was making bets on things that it shouldn't have been making. It was excessive. As the Senator has mentioned, between the regulators and some of the rules that have been passed, the system is stronger now, but we still have not dealt with this. And I would just ask my colleagues to consider later this year looking at something to finish that work so we could really shore up the housing market and do everything we can to keep that portion from happening again, because again, we know how important the housing industry is to us. And then secondly, I would say, and I think the window's closing. Just for what it's worth, there are a lot of people throughout our country that have a stake, a personal stake, in trying to keep the status quo in place, to try to keep a situation where we have, again, private shareholders who the public believes has the government standing behind it, and no matter what they do, they're going to be bailed out or whatever in conservatorship. And people have made, people are beginning to see that maybe, even though these entities haven't paid back a single dime yet, they haven't reduced the $188 billion, not one penny of capital or indebtedness has been returned. Certainly there have been dividend payments. But people are coming out of the woodwork now to try to reinforce the old system. And I know that next year we're going to be moving into an election cycle again. It happens every 2 years around here. We've had a pretty productive year this year so far. I'm really proud of a lot of the work that the Senate has done. This is a big and important piece of work, as we've mentioned, that's undone. The timing is right because of a lot of forces out there that, again, would like to keep the status quo. And I want to again thank the Senator from Virginia for his thoughtfulness, for the other members who have co-sponsored this and gone through a really complex issue and I think come up with a very elegant solution to this problem. And I hope we'll have the opportunity to work together to actually do something again that makes our country stronger and causes our housing finance system, which is so important to our economy, to be more sustainable. So I thank the Senator. I look forward to coming down to the floor with him again and continuing the many meetings we're having with senators on both sides of the aisle and hopefully helping with a lot of other people's input, helping come up with a solution that the entire body addresses. Okay, thank you. I yield the floor and notice the lack of a quorum.
Clerk will call the roll.
Mr. Alexander.